Hey guys, Jim here, and I know I haven't shot a video for quite some time, so in this video I want to make it up for you guys and give you a little bit of content in terms of your trading journey. Now, today I want to talk about and show to you something really cool and how you can grow your account relatively fast, way faster than what you normally expect. Okay, now this is about compounding effect, and more importantly some good tricks called asymmetric compound, and what it is, how it works, how you can do it, and let's look some data, because as a trader you need to operate based on data, right? A lot of people, they take a trade, they don't have a plan, they don't have anything. Now let's say your starting balance is, and by the way, what I will show to you, it works with any balance, and yeah, let's go. Let's say your starting balance is 1000, for example. Okay, now this is how much you start with. And by the way, this is my FX book, Forex calculator, compounding calculator. Any compound calculator can do the trick. What you want is the starting balance, periods, it could be days, it could be trades, it could be anything for you. Okay, let me put, for example, 60 periods, it could be 60 trades, or 60 days, one trade a day, or 60 days, which on every day I have a specific goal, and this is gain per period, essentially how much you want to make, either per trade, per day, even per session, 60 sessions. So in one session you might take 20 trades, okay, but you need to have a specific goal, right? And not many talk about the stuff that you will see right now. Now let's say gain per period, and let's go relatively slow, let's say 10%. Now you might say, oh, relatively short 10%. Relatively I go for 20, just to be honest. Does that mean that I achieve that? No, but I do it sometimes, not sometimes, many times way above the target. Now it could be, as I said, 60 trades, it could be 60 days, so every day you aim for that 10%. It could be 60 sessions, it could be 100, right? It could be how to it could be you know, essentially the goal that you put, guys. All right, now let's calculate, and it's showing the starting balance. I will show to you how to enhance that starting balance, ending balance. Okay, second trade. After many trades you will have, you know, this. Obviously, okay, this number won't be accurate. Actually, this number won't be accurate because you cannot take 60 trades without stop loss. Okay, and then you run into different issues. For example, let's say you have 275,000, and let's say in order to make, you know, that, you need to go heavier on the lots. On the lot size, you might be restricted on the lots. Maybe you need to split the order in essentially two orders. Let's say you hit 100 lot, you maybe need to take two orders of, you know, 100 lots, and then the next one 100 lots. But of course, that's how it is. And by the way, it might be 100 periods, right? You might do that. Now, does that mean that you will make that? No. Does that mean that every trade would be a winner? No. But it will give you a guidance. A lot of people, what we see, alright, is they start with 1,000, they go 1,100, 1,500, they never secure anything, they never move the stop loss to break even or even trail the stop loss, right? And then they close that to minus. And that would be a perfect example that I saw yesterday on Twitter. One guy was up on one account about 8,000, okay, and he closed minus 2,500. So he lost 10,500 because he never secured anything. That's bad. Okay. Now, if you want to trail, great. Let's say you pass the the $100, for example, in this example, mark. You take the partial, so that balance go from 1,000 to 1,100. You move the stop loss below that, let's say 1,190, and if it continues to go higher, great. If not, you can stop there, go on the next one. Okay, you need to act as a robot, not emotions. If you win, that's what I say all the time to my clients that I private mentor, is if you win, great, you move to the next setup. If you lose, hit stop loss, great, you move to the next setup. You don't overthink about it and say, oh, this trade and I'm so invested in that, and great, you hit the stop loss, move to the next one. You hit the take profit, great, move to the next one. There is nothing to brag about it. And you take trades as the market develops, as they come. Okay? You don't force the trade because you want to trade right now. Okay? It's either you have a setup or you don't have a setup. That's how it is. Okay? Now, if you have a setup, okay, and you take the trade, you at least need to have an exit. Not only as the price develops, because you might see different things and say, okay, it's worth to me to keep the trade, but also to have a percentage, like how much you want to make, right? Now, and depending, for example, what you do, even if you put 2%, which, by the way, with that type of money, it cannot be livable, because you need to take money for you to live off. You need to leave money in the account to compound the account. So yeah, you won't be able to live, and it will take you, for example, let's say in 100 days. I mean, it can compound fast, but still, it will take you, years, unless you do some scalping and you try to get, this per trade. So yeah, that might work. But for my clients, we go for 5R, 10R, 20R, 30R. Most of the times is between 10, 20R trades, because we have very, very small stop loss essentially, and we get on high probability trades. Yeah, and that's that. And by the way, this works with any balance. Let's say someone starts with 500. Let's say you aim 10%, and let's say 50 periods. See, it adds up very, very fast. And if I go from 50 to 80, okay, the money goes up very, very fast. That's how I'm able to do like $100 to 35,000 in less than a week, and it's all recorded. And also, withdraw money as well. If you go in my Twitter feed, And if you are part on my Telegram group, you will see that I do like 5, 6, 7 withdrawals a day, and there are $500, 1,000, 1,500, 2,000, 800, 600, 300, 4,000, and it's not like, let's say I made 4,000, I withdraw 4,000. If I make 4,000, I withdraw 2,000 or 2,500. So I leave always money inside the account to compound. Okay, does those stuff, what I'm saying, make sense to you? And that's how you are able to. And at some point, you won't need. Let's say you reach to the point of you having 100,000 or 500,000. You don't need to, leave the money into the broker every time. You can withdraw. All right. Now let's see another concept, which is, this is very good, but let's improve on that and make it asymmetric compound. And let's say you make 1%. And let's say you, in your trade, you don't get like trades like 10R and trades like that, 20R. You don't get anything close to that. And let's say you get 1R, okay, 1 to 1 or 1 to 2. Now let me share my trading view, and let me find it here, capture window, and see how it works. And we go over to trading view, and see, great. And now you could see my trading view. Now let's go over to the here, asymmetric compound, what it is, how it works. All right. Now, as we saw earlier, it is like 1%, then you risk 1%, 1%, 1%. It has a growth, but it's not fast. It's not what you want. I mean, it's not great. So let me show you what you do. Let's say you risk 1%. Risk trade 1. Okay. We'll go here. You risk 1%. You make. Do you want to calculate like you made 1 to 1, 1 to 2? So you made, let's say, made here, 1 to 2. All right. Now, trade 2. Okay. What you do is you risk what you made plus the initial 1%. Okay. So let's say you had 100%, you risk 1%. If you lose it, you go 99%. Okay. If you win, you go 102. Let's say 1 to 2 or 1 to 1. Okay. It doesn't matter. So you risk what you made plus the initial risk plus 1%. So let's say you made, so in the next trade, now let's see that example, okay? Example 1. Let's say you made 1 to 1, right? So you risk 1%, okay? You made 1%, so you go from 100K to 101K, okay? So let's say 100K, risk 1%, which is 1K, right? And you go to 101. It's all about math and understanding your stuff. Then second trade 2, okay, you have 101k, you risk 2k, okay, I risk 2k, so the 1k that you made plus the initial risk, okay, plus the initial risk, so it is 2k, and if you are on 1-to-1, you go instantly to 104k, okay. Trade 3, okay, you risk the 4k that you made plus the 1%, okay, and you risk 5k, okay, so essentially you keep risking the initial risk plus the profit, so you go 108k in 3 trades, and this is enough in 3 trades to pass any challenge, okay, but it's not about the challenge, it's more about to compound the account and you get an idea of the numbers, okay. Now let's say that you have 1-to-2, so we go example 2, and it's all about math. You cannot beat math, you know. You either follow them or you try, you know, to create your own math, but it won't work. But it's all about, especially on Forex, it's all about numbers, probabilities, percentages. It's all about math, okay. You have 100k, you risk 1%, okay, which is, as we said, 1k. You made 2%, so you have trades 1-to-2, okay, so you go to 102k. Then trade 2, okay, you have 102k, okay, you risk 3k, which is the profit plus the 1%, so you made 6k, okay, 6k, so you go 106k. Trade 3, you risk the 6k plus the 1, so 106k, risk 7k, you 113k, and so on and so forth. Okay, this is an asymmetric compound. And by the way, let's say on another example, you take the first trade, right? You win. Second trade, you lose. Okay, you are back to 99%. You only risked 1%, but you look the upside potential that would be, you know, great, essentially. Okay. Now, if you use a system like the one that we use with high probability, and we could, in this, we do it a little bit more different, like a variation of that. It can explode the account while keeping a lot of the profit. For example, my clients, okay, we use a different variation of that, but we don't make like 1-to-1. We don't go, those type of trades are not even for us to laugh. Okay, we don't even consider. I mean, on 1-to-3, 1-to-4, we book the first 1 hour and we put partials. So while, you know, most of other people, they are happy to make, you know, 3 hour. Anyways, in our example, okay, what we do, trade 1, and what we do, generally we have like 10R, 8R, 7R, 5R should be the minimum. Okay, and many times we do like 20, 30R. Many times. It's not like lucky trades. Many times within the same day. Alright? Now, trade 1. Okay? You risk 1%. We have a little bit different risk, but each one is based on their own, appetite. And let's say we made 5%. Okay? Trade 2, so here we have 101k. By the way, on my 100k, I never risk more than $250. Okay, on the challenge. Never. No need. Because if I make minimum 5R, I made 1% by risking little. Now, if I risk, 2k, I will make 5k, right? But what if I lose, 5 trades? I want to give myself the most chances, okay, to, get the good runner. Most of the people, they try to go all in within few trades. But using asymmetric compound and mitigate your risk, you can have crazy exponential. Crazy. And also protect your downside. Alright? Trade 2. So we made here, let's say 105k. We don't risk 1%. I'm just giving you the numbers. Okay? Second trade. What I say is we keep, either we split it by 3, so we risk 1,500, or we split it by 2. So trade 2. Okay, risk 2.5k, which is, so we keep the initial risk plus 50% of the profit, and we risk, 50%. Okay, so it will look like that, and we'll go for, let's say 4R, we'll go 112. Okay, now you might say why it's 112, it's 112.5, because we go 105k, we risk 2,500, so our balance is 102,500. And let's say we made 4R, 5R, 10R, so we go 100 and, let's say on 4R we made 10k plus the 2.5k that we have, we go like that. Trade 3. Now we made 10k. We split it by 3 or by 2. Whether from the profit, because always we keep, either if we lose to have another free chance, okay, or to withdraw, trade 3. Okay, we have from the profit of the previous trade, not from the total profit. The 2.5k is banked. We made 10k, we risk either 3k or 5k. We keep that 5k banked. Okay, so let's say we risk 5k. If I lose, okay, I will have either another chance for free, essentially, or I could still end up with a lot of profit. Okay, and let's say we do again 4R, which, I mean, the ones that knows, they know. Okay, and we made 20k plus 7.5k that we have, we go to 137.5k. Okay, now all this works, okay, because we have good risk reward. We have here, risk reward. And most people think like high risk, high reward, small risk, small reward. Those people are stupid and they watch a lot of movies, okay, and they are illiterate. Okay, we want small risk, big reward always. So because I say that, and I'm sorry, but with the amount of the people that I have talked, they told me all the time like high risk reward in their mind is like high risk, high reward. Okay, listen, I know that the irony is like I shoot this on YouTube video, but this is not YouTube videos. It's real life. You don't want to go to have high risk. You want to have small risk with the highest reward possible. All right. The irony is like this is like a YouTube. Anyways, and also not only this happens not only because of the risk reward is more because we use the asymmetric compound, but with our mentality we don't go and do it that like that here. We do it, we keep also the profit now. And you understand like on trade 4, trade 5, it can, you know, exponentially grow. That's how I was able to go, for example, live with $170 to 6-7K in one session. Not in one trade. Go all in by having multiple trades, stop loss, trail, taking partials, go in another pair, and so on and so forth. Okay. Now let's say, okay, on trade, let's say trade 2. Okay. Trade 2. Okay. It is a loss, equals loss. So I am here 105K, I risk 2.5K, I lost. So I have 102.5K plus the 1K, the initial, which I haven't. Now what I do, this is how I end up, because from 105 I risk 2.5K, I lose it, great, move to the next one, I have 2.5. What I do, trade 3, right? Trade 3, okay? I split that in 2. So my risk is 1.5 or 1.5. Okay. If I lose, okay, if loss, still 1.1K, still 1% up. Protect a lot my downside. It's not how much you make, but how much you can keep. Okay? Nobody talks about that because everybody, they try to flash their cars and they never say how a real trading should be. And I understand that this video won't get even 50 views. I don't care. I'm only interested for the 5 serious people that will watch the video and understand how proper trading works. I'm not an affiliate, bro. I'm not an influencer, bro. I don't care. If you want to go in a scammer that try to tell you, oh, I turn, $100 into 1 million, and he cannot do that, while I have done that multiple times in my life, without going all in, without going to 20K and, risk 10K on that, okay, without having proper risk, okay, without need to go and find some shady broker on Seychelles and Cayman Islands, without whatever that they advertise, they have it for years and promote that broker, and when they do the trade and they essentially lose, they blame the broker, or slippage or spreads or whatever, because they cannot do it live. Without going live and never take a trade like many people do, okay? Without going and try to mess up with the MetaTrader 5 settings to put the trades, after they happen, because let me show you the scam. Okay, a lot of people, what they do, they see that move, they can go inside on the MetaTrader 5. There are some tools, and they get from brokers access from the shady brokers. Okay, from the shady brokers, not a legitimate broker can do that. They gave them admin privileges. All right, and I can go right now and place an order here. Say, hey, I took that trade. Okay, if you have admin access, or here, and place that when the bar is here, to go back and place that trade here. Okay, it would be obviously a demo, and say 50 lots here. Okay, many have been caught to do that. Alex G is one of those, because at some point we need to call some names out. There is no point, and it's not like it's fake. It's how it is. Another one is, how is that the name? Oh my God, the one that have the Dominion broker, the owner, the Pakistani boy. What is the Raja Banks, whatever. You understand to whom I'm talking to. For he have been caught do that crap. Also, he have the broker. Obviously, it's easier. Not easier. It's like walk in the park to manipulate a trade. Have been caught about that. There are videos. If those guys are legit, they can go into IC markets, deposit money, and they trade it there. Okay, and let's see if they are able to get an admin privilege to do something like that, but they don't. Anyways, that was a sidetrack. Okay, now and nobody did like to protect your downside. Okay, nobody. What's that's bad. And let's say trade 3, trade 4. Okay, I risk 1K or 500. Okay, and let's say I won. So I lost trade 2. I lost this one as well. Still I'm up 500. So I risk 1 time my initial risk, right? And if let's say win, let's say I made 2K, and by the way, I can run 10R, 20R. Okay, let's say I made 2K. Okay, now I will have 102.5K because I have 500 plus the 2K. All right, I'm up. Trade 5. Okay, I risk 1,250. Okay, let's say I won. I made 4,000, 5,000. I made 5,000. So it will look about 16.50. You see, even if I lost like 2-3 trades in a row, okay, I'm still up. Never risk more than the initial risk. Even if I risk 1% and I lose, not 1%, let's say, because I use an amount, not a percentage. Let's say I risk 250, I lose, I go 125. Now, it's not like I go 125 and try to catch 1 to 2 trade. No, it's not like that. I go 125 and I try to catch 1 to 5 minimum. Okay, and in order to do that, it's not like to give you a visual representation here. It's not like my stop loss is like that, and that would be I would say it's an enormous move to do that. You cannot do it either sustainably and many times within the day. You cannot do that because there are not many times within the same day that gold will move 500 pips. But there will be many times if I put 5 pips, 10 to catch 50 pips, which would be one candle, right? Or 100 pips. So here, let's say I put 10. And by the way, there are videos with me that I have entered with 2 pips stop loss, 3 pips stop loss, 5 pips stop loss, many times. Okay. Let's say I want to catch 5 bar. You see, from 391 point whatever to 3,398. This is more reliable. Why? Because there are many candles that are 5, 50, 60, 70 pips, 100 pips. If you don't believe, let's go here, and this is like 5 minutes. Candles, you see here, this candle started 3,100, 301.11, and go 293 within 10 minutes. Now that candles, those 2 candles, is what? 200 pips. Even with 20 pips to have stop loss, which is $2, it's still, you made like the move up, same situation. And this is like 5 minutes. The move down, same situation. This candle, okay, one move from 300, 3,300 to 3,309. This. So to catch 5 bar, this. I know it's easy to talk in hindsight after the move happened, but the point is not to say, oh, you enter here. Of course, there is a strategy in place. It's to show to you that in some assets, let's say US 30, gold, Nasdaq, those moves, even one candle, this candle, okay, from here, 3,285 goes 100 pips, one candle, okay. And if I go to 1 hour, or 30 minutes, we see that all the time. It happened like 1 here, 2 times here, 3 times here, 4 times, 5 times, 6 times, 7 times, 8 times. Those are within the day. 9 times, 10, or let's say this one, this one, this one. 1 or 2 candles within, let's say, 5-10 minutes, you get those moves. It's not the goal to catch this move. Okay, we see here, one candle. Let's measure that candle. 302, let's say here, 301 goes to 97. Okay, that's 4 hours. Right here, from 97 to 06, that's like 9 hours, right? Or with 20 pips stop loss, it's 5 hours, depending on the strategy. Imagine to use 5 pips stop loss, okay, which could be crazy. Anyways, back to what we were saying here, and yeah, I wanted to show to you the asymmetric compound, how I use it with my clients, and a different variation, which could be way more advanced. Obviously, we have different system. We have high risk, not high risk, small risk, high reward trades. I teach them how to catch like 20-hour trades multiple times within the day. And high probability trades. It's not like you spam it randomly, because if you do it randomly, you hit the stop loss randomly all the time, because if you have a stop loss like that, it won't gonna work. It's either headshot or nothing. Anyways, that's that. I don't want to take much more from your time. I hope you like it and use it into your advantage, and talk again on the next one.